Have you heard of IRMAA, and do you know how it could impact your retirement? I'm Becky Swansburg, tax and legislative risks expert, and I'm here to tell you that IRMAA may be one of the most important topics for you to understand this year. So what is IRMAA, and why might it matter to your retirement? IRMAA is a special government surcharge that some savers have placed on top of their Medicare Part B and Part D premiums. For higher income savers, this surcharge are additional fees that they pay for their Medicare benefits. Now, many savers have their IRMAA fees automatically withheld from their Social Security checks, which means increases to IRMAA in the future can have the effect of reducing the amount of Social Security that ends up in your bank account. So what are the chances that IRMAA will rise in the future, leaving you with less Social Security income to spend? Those chances are pretty high. Why is that? Well, every year, the Centers for Medicare and Medicaid Services and their trustees put out a report on the financial health of the various trust funds for U.S. government health programs. In the most recent report from last year, there were some very interesting insight around where IRMAA rates may be headed. What the trustees said in the report is that for Medicare Part B health and Part D prescription drug coverage, those trust funds were actually fiscally sound in the next 10 years and beyond. Great news, right? We don't have to worry about those trust funds running out of money. But as always with the government, there was some fine print, and deeper in the report, it shared the reason why those trust funds are not likely to run out of money. And what the trustees said was that Medicare Part B and Part D trust funds will be financially stable through the next decades because the government has the ability to raise both premiums and IRMAA surcharges to meet any government funding shortfalls. Now, we know America has a rapidly aging U.S. population with more savers requiring Medicare. We also know that those programs are growing in expense. Now, if the government's lever to adjust or to meet that growing need in Medicare is raising premiums and IRMAA surcharges, there's a good chance for savers like you and me that IRMAA could increase in the years to come. And that could leave us with less spendable income because more of it is going to the government in the form of these surcharges. Now, it's not all doom and gloom. There are strategies we can use as savers to help reduce the amount of IRMAA we might be subject to in retirement. But it's important to work with a financial professional who understands evaluating not only taxes in retirement, but also the complete spectrum of government surcharges and fees like IRMAA. Only by addressing both taxes and IRMAA in retirement can we help make sure that we get to keep more of our hard-earned money and send less of it to the government, whether it's in taxes, surcharges, or fees. The time to evaluate and act is, of course, now.